Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and today I wanted to look at a counter trend trade in Netflix. So when I look at Netflix, the only thing I can think of is, wow, this chart is extremely bullish and it's in a very well-defined uptrend. In the same breath, you can come back to the daily charts and you'll see where we have a gap fill from the post-earnings move. And if we measure that there into that high, that would take us right down into $100.75. So from the perspective where I'm usually addressing these charts, I'm going to quote the pullback to the 13 as just a pullback in an otherwise bullish trend in an area where I'd usually look to play it long. However, if you want to find situations where it's like, this one I actually want to play to a gap fill, or for whatever reason, if you have a bearish take on this, or if you flat just need some bearish exposure in the market, how might you position this trade? The first thing that I would do is pull up your options chain, because this is a great way to keep yourself in check and to get a feel for what the expected move you're looking for will take in time. Because to look at this and say, okay, I'm looking for a gap fill in Netflix to 175, that's very simple. Anybody can do that, but you've got to say, what is your time frame for a trade like that? Well, looking for about a $6 move to the downside. The first contract that would encompass that range is this August 2 weekly series. When you look at this, you'll notice that there's not a ton of volume. So if you really wanted to force the trade, you might be able to get a fill there. But why not go just a step further out to make sure that $6.50 move is well within your expected range, and then start setting up strategies here. So we've got our price where we're looking for our gap fill. We've got an options chain that will suggest an $8 move. Now, when you've got all these various strikes, it can make it a little tricky to configure. I start off by just right-clicking here in Thinkorswim and buying a butterfly. Once I'm this far, let's start positioning ourselves in relation to the expected move, or essentially down into the zone we want to get to. And this is $100 for the body. Then what I would go to is make this $5 wide on each side, so it is balanced. And also too, so you're not having to deal with any of these odd strikes that came up after the split. This spread's going here for about 89 cents. Anytime you can buy that for 1/3 the risk of the entire butterfly, I think that gives you a great risk reward. And now you've put yourself in a situation where you've got 25 days to make that target. The most you can lose is about 90 cents. The most you can make is $4.10. And the more you'll put yourself in those types of situations with trading, the better you'll do. So I hope it helps, gives you guys some things to think about in the days ahead. And I'll talk to you at the next free video.